Turnkey property is basically your fix and flip property, but instead of selling it to a homeowner, you're actually selling it to an investor. And then the great thing with that is because of that, I've been able to start my own property management company for my own rental properties that I have, and then also the turnkey properties that we sell to other investors, and have about 4 employees in my property management company because of the turnkey business. Hi guys, my name is Sharad. I am the owner and founder of REsimpli. I live in Carlsbad, California, but I do my investing in Northwest Indiana, right outside of Chicago. For anyone who's not familiar with the market, it's literally 30 to 45 minutes right outside of downtown Chicago. I used to live in downtown Chicago. That's why I started investing in Indiana, and I've just kept investing there. Really, really great market. So I do fix and flip. I do some very, very little wholesaling, maybe a deal a year or every other year we'll wholesale if we have too many projects going on. But primarily we do fix and flip. And even with the fix and flip, we're very focused on the turnkey properties. And then because of that, we've also started our own property management company because of the turnkey property. So it's been really, really great. So I thought, we'll talk about that topic. Today, I just signed a sell side. We're selling a property today, or actually tomorrow. So I signed the closing documents today, and we're going to net about $65,000 on that property, selling it as a turnkey property. And then we'll end up also managing that property. So we'll make about $250 a month for a property management company. So, and this is a deal we would not have been able to wholesale, and we would not have been able to sell like your typical retail flip. And then we made money doing turnkey property. So I thought it'll be a great topic to talk about that. So for anyone who's not familiar with what turnkey properties are, turnkey properties are basically properties that you buy, fix and flip properties, then you rehab them. But instead of selling them to a homeowner, you're actually selling them to an investor as a turnkey property, meaning that depending on whether you're renting it out or not, but in our case, we buy the property, we rehab it, and then after that, we actually rent it out and sell it as a complete turnkey property. So when the owner buys the property, they're making money from day one. So that's what a turnkey property is. It's basically your fix and flip property, but instead of selling it as to a homeowner, you're actually selling it to an investor. And then the great thing with that is because of that, I've been able to start my own property management company for my own rental properties that I have, and then also the turnkey properties that we sell to other investors, and have about 4 employees in my property management company because of the turnkey business. So I started out doing turnkey back in, I want to say like 2012. We were selling a lot of properties to investors based in Australia back like 2010 to 2014, 15. The Australian dollar was very strong against the US dollar. So you had a lot of investors from Australia and New Zealand buying properties in US. And then I connected with a company that basically was a marketing company in Australia. They were selling properties to Australian investors, and that's kind of how I got started with turnkey properties. And it's been a fantastic business model for us. The benefit of that is it is much easier to rehab a turnkey property than it is to rehab a fix and flip, your typical retail property. The reason being, with our turnkey properties, everything is very, very standardized. Like, we're making very few decisions. If we're doing roof, it's always the same roof that we're putting. If we're doing flooring, if we're doing, your plumbing, your electric, your HVAC, everything is exactly the same. The paint, everything is exactly the same, because we're not selling it to a homeowner, where a homeowner is not coming in and looking at our property against, 5 other properties on the market and going based on the design. With turnkey properties, we're not listing them, we're renting them out and then selling to an investor. All they want to make sure is that the property is functional, and all the foundational and mechanical things have been taken care of. So it makes our rehab process very, very, very simple. And that's one of the primary reasons, I think I mentioned in the last call or the call before that I live in California. My entire business is in Indiana, and my project manager she actually also lives in California, 1 hour north of me, and she's able to manage all our projects. One of the primary reason being that we're doing a lot of turnkey properties and not as many retail flips. So we don't really have any decisions to make. It's as far as the product or finishes are concerned, it's we go in, we toilet, light fixtures, flooring, paint color, roofing, windows, everything is already decided. We have a list. We just, all our contractor needs to know is if you're doing it as a retail or if you're doing it as a turnkey. If it's a turnkey, the contractor knows exactly what needs to go into the house. It's not even a conversation down to the, the your doorknobs and everything, hinges, everything is already decided with that. So once you have, so for us, the best area to invest for turnkey properties, if you guys are not doing that, I would say is B plus to C minus neighborhood. I would say is the best neighbor. Those are like neighborhoods where it would make the most sense to do a turnkey property. We don't do anything in D neighborhood for my property management company. All 4 employees that we have in our company, they're all female. So we want to make sure that they feel comfortable managing a property. They feel safe, going to a neighborhood, checking out, showing properties. That's why we've completely stayed away from D neighborhood. But I know some other investors that do really well investing in the D neighborhood market, but we don't do any of that. We stay in your B plus, B minus, and C plus neighborhood. That's where there's a lot of demand for rental properties, but you don't have as many homeowners looking to buy. And it's a really great cash flowing properties. The property that I signed closing docs for today, we're selling it for about $250,000 and it's rented for about $2,500. So it's a pretty easy sale for us. We're selling our properties in our area for whatever the rent is times 100. So, that's pretty much how we come up with our price point on these properties. We would have actually made $85,000 it. We had the buyer ready to buy it for $270, I believe, but the property didn't appraise for $270, it appraised for $250. So instead of $85, we're making $65. It's a little bit of bummer, but still $65,000 is still pretty good net profit on this deal. So yeah, I would look at your B plus, B minus neighborhoods would be ideal neighborhoods where there is demand from homeowners also, but then you also have these very strong tenant demand to buy in these neighborhoods. The property that we sold today, or the one that we're selling tomorrow, is in a C neighborhood. I own a bunch of properties in that neighborhood. There wouldn't be many homeowners who would want to live in the neighborhood. I would say it's primarily, it's a 2-unit property that we sold, but there's some single family houses also. It's primarily tenant rental properties in that neighborhood. So that's where you have very strong cash flow in that market. And once we have the property ready, once we figure out what neighborhoods we want to sell in, we don't even have to run our comps or do any of that. It's a very simple thing for us. We know exactly what rehab it's going to go into the property, and then the price point is very simple. Whatever we know how much we're going to rent the property for times 100, that's our sell price. If it's going to rent for about $1,500, at resale prices, $150,000 on the property, and then we back out how much work it needs and then how much we want to pay for the property. Another benefit that I like with turnkey properties is in most cases, we're selling directly to an investor that we have a network of investors, and we're not paying any closing costs. We're not paying any commission or any of that. So the same $250,000 property, if we had sold to a homeowner, let's say, we would pay about, between agent fees, commissions, and other, closing cost credit, I would say we would make about 8 to 10% less on that deal. So you could take another 20 to 25%, 20 to 25,000 off the top. So instead of $65,000, we would have made, $45,000 to $50,000 on the property. So that's another reason why I like turnkey properties. You don't have any commission, you don't have any agent fee. It's a straight transaction that you do with a homeowner. And also these are high net worth individual. So you're not going through FHA loan. So you don't have the FHA loan, like the 90-day seasoning period. So if we buy a property today, we're able to rehab it, rent it in 30 days, 45 days, and then we could just sign a contract for it right away because it's going through a conventional loan, and in some cases, it's actually going through, cash transaction. And if you do not have a network of buyers, I really recommend looking at this website. I've shared it in some of my previous calls also. Roofstock.com, really great website for selling turnkey properties. They charge about 2.5%, I believe, for each property that they sell. It's basically a marketplace for turnkey providers like ourselves and then other high net worth individual investors that are looking to buy turnkey properties. And you can, list your property right here, go through the process of listing your property. If you want to see kind of what properties they have on the market, this is a great tool to just get a sense of what other investors in your market are selling their turnkey properties for. So I can go based on the location. We invest in Indiana. So I can do Indiana, and I can go ahead and do that. I think I can do map search also. So we invest in a very small area right here. I don't see anything in our market right now, but let's say if you were in the Indianapolis market, you could go right here and just click on any one of them and then just get a sense of what other investors are selling their property for. So you can see like this one is selling for $430,000. I'm not familiar with that market, but seems like a really great price. And then you can kind of like this property, even though this is in Indianapolis, I would say it's very, very similar to the properties that we sell in our area in Northwest Indiana. Like this, we would sell for about $110,000 to $125,000, depending on how much it's rented for. And that's how we're coming up with our price point. But this gives you a good idea of, what other investors are selling their properties for. Like, let's say if you had a deal where you could not, it would not make sense to sell this to a homeowner at 110,000 because, you're paying agent fees, commissions, and then also in a lot of these cases at a price point like this, you're paying, closing cost credits. After paying that, you may only net, let's say $95,000 versus the same deal you could rent out, sell it to an investor, and instead of, netting 95 on $110,000 sale price, you could net, 107 to 108,000, depending on, how much closing costs you're paying. So it adds that extra 10 to 12% to your net profit. That's where it's been super, super profitable for us. So at this point, we have a network of investors that we're able to sell properties to. But if not, Roofstock is a great place to list your properties and just get a sense of, what other investors are selling their properties. But they don't, I believe they have, if you list with them, they have like a 15 to 30-day exclusivity period that you have to keep your property with them. You cannot sell through another, you cannot sell directly, or you cannot sell on MLS. But even if you did, you just have to pay them 2 to 2.5% commission, I believe. So, and it's free to list your property. I don't think they charge you anything to list your property through them. So it's a good idea to go through and do that. Another great thing about selling with the Roofstock is, so different between selling with Roofstock versus us selling directly to our investors. When we sell directly to our investors, these are investors that we have relationship with. So they expect us to, have the property rented out. They expect us to have a property management company in place because they just want to buy the property and then just have, positive cash flow. So you need to have some relationship. In our case, we have our own property management company, but if we did not, then we would need to have a relationship with a property management company that can rent out the property and manage the process after we sell the property. But with Roofstock, the great thing is they have preferred vendors in each of the markets. So when you sell through them, you don't have to worry about the property management. You sell the transaction, then you're done. You don't have to worry about anything. In the cases where we're selling directly to an investor, sometimes the investor would come back to us if there's an issue with the property. Then we're still, just out of good faith, we'll take care of some of the things. If it should have been taken care of before, we sold the property. Let's say there was a plumbing leak, or it's some, furnace needs to be updated or upgraded, stuff like that. We'll go ahead and take care of that. But with Roofstock, you don't have to do any of that. Once you sell the property, it's done. It's not your headache. But again, if you have enough properties that, have issues after the sale, then they may not let you list the property. And another thing with Roofstock, I don't manage the process. Somebody on my team manages the process. But another thing with Roofstock is when you sell through them, they ask you to have a property inspection done before you sell the property. So once you've done the property inspection, this is just, when the buyer is buying the property, they have visibility on kind of, all the repairs or all the work that's been done and the condition of the property. So that's one thing. I think it's a good idea anyway. Like even with our properties, when we're selling directly to an investor, we still get a property inspection done after the work has been done, just to kind of keep an eye on, how our investors or how, our contractors are working the property, if they missed out on any major, rehab item or something that they should have done, but it got missed through our scope of work or something like that. So any questions on this? So, Manuel, I'm investing in Northwest Indiana market, right outside of Chicago, practically a suburb of Chicago. Like when I haven't been to Indiana in about a year now, but when I go, I stay in downtown Chicago. I stay in Chicago with my brother, and then I just drive to Indiana. It's like 30 to 45 minutes drive, depending on what part of the city you're coming from. So Roofstock is, it's kind of like acting as a real estate agent. Think of it like, I'm trying to think of like Amazon, right? I go in as a seller, I list my property. You could be a buyer shopping on the property, and then you're submitting. Just Roofstock is managing the process. So think of like eBay, but you're not like bidding on properties. You have a property that you've listed with a price, and then you come in, you make an offer on the property, then we'll negotiate, but Roofstock will handle the communication, the back and forth. So yeah, I guess you could say they're acting as a real estate agent in that way. Yeah, it's not a place for wholesaling. At least we haven't. This property, interestingly, it doesn't look finished. So it kind of looks like it needs some work done to it. But when we're listing our properties, those are rented out, everything is updated, but this is not a place to wholesaling, or at least we haven't wholesale. But I guess you could, it's a marketplace to sell properties. You could possibly wholesale, but you would make the most money doing the work if you are, if you're able to, you're comfortable doing the rehab and have, the funds and resources, contractor network available. You would make the most money doing the work and then renting it out and then selling the property. That's where you're adding the most value. But one thing I would say, based on kind of what we've done in our business, is you don't have to make these houses look super fancy. Like at least in our market, we're not putting, we're not putting like super expensive material. We're putting good quality material. Now we've started putting granite countertop, but we're putting very base granite countertop. The reason being, let's say if, so for every, dollar that we get, additional dollar that we get in rent, we're getting extra $100 back in purchase price. So instead of, let's say $1,000, but just by putting granite, if we can rent the same property for, instead of $1,000, for $1,050, that adds $5,000 to our resale price because of the extra $50 that we got. So what happens in that case is, if our cost to put granite, let's say it's $2,000, so we could spend the $2,000, but now we're getting extra $50 and we're getting extra $5,000 on the resale. So on that $2,000 for putting granite, we're making additional $3,000, in profit on our property. So you could do that, and then it makes the property, it needs less maintenance in the future. If you spend a little money upfront, then it needs less money in repairs down the road, and then just presents the property better. If you can put like simple things like backsplash, again, it doesn't have to be the fancy backsplash. It could be a very basic tile that you put, but just when the tenant walks in, again, we try to push the rent in our market. Instead of like $1,000, we may start out at $1,100. Now that's adding $10,000 on our purchase price, if just based on simple updates, granite countertop, backsplash, if we're able to get that additional money. I mean, so the question is, has the rent times 100 formula work for other areas rather than the one you usually invest in? I would say it's pretty standard in Midwest. Of course, I live in California. It would not work in California. It would not work in New York. It would not work in, higher cost places. So we have investors that actually live in Chicago, no more than 1 hour drive from the properties where they're investing in, and they choose to just invest with us rather than going through the process on their own or even looking at properties in Chicago, just because of the value that we're able to provide, just because of the the headache that they don't have to worry about finding a contractor. They could do the same thing on their own, but these are people that have high net worth, and they have businesses, they have jobs making good money, so they don't have the time, but they have the money. So where we're coming in is they have money to invest. We're adding value by providing them an asset that is cash flowing from day one. It's presentable. It's a completely turnkey project for them. They just come in. All they have to do is just invest the money. Everything else is taken care of on our end. Few things I would look into is, I used to live in Chicago, but the primary reason why I invested in Indiana is just because it's more landlord friendly than Chicago. So if you're going to go down this route, I would definitely look into investing in a market that is landlord friendly. In Chicago, you could, there's some tenants that know the landlord tenant laws really well, and they would game the system. And then, in some cases, you can't even evict them for a year. I had an investor, this is a few years ago. He used to live in New York. He had bought a property in Chicago, and it was a tenant occupied property. It's actually crazy story. There was nobody living in the house because there was no gas, there was no electric, there was no water to the house. But someone had claimed that they were living in the property. They made up like a fake lease, or they had a lease from the previous owner. And this investor in Chicago, this investor in New York, he reached out to me. We connected, and I was helping him with the eviction. It took us 1 year of getting that tenant out, and even after the year, it wasn't that we actually evicted. We had to settle. He was asking $10,000 to move out, and I think ended up paying him like $3,000 to $4,000 just for him to move out. So even after going through 1 year of that process, we still had to pay him $3,000, $4,000 to move out. And again, there was no gas, no electric, no water in the house. So he could not have been living in the house, but he was still, claiming that he had some paperwork or whatnot. So it was a very, very messy process to do that. That's why that was primary reason why while living in Chicago, I decided to invest in Indiana. So if you're going to do that, if you're going to go down the route of turnkey, please make sure you're looking at areas that are landlord friendly. A lot of times we're buying these properties in Indiana, and they're tenant occupied. That's where we add value to the sellers that we're buying the property from, is that these sellers have tenants that will not want to leave. So we come in, we buy those properties, we say, don't worry, we'll take care of the tenant. And in majority of those cases, we're able to get the tenant out in 1 to 2 months. Now imagine if having to do that for, you have to go through an eviction process for 6 months to a year. Your cash is just sitting on the property, you're not making any money, and it's just your ROI really goes down the drain. So that's why, I love investing in Indiana, or other, like most of the Midwest markets. You will have these opportunities where it's landlord friendly. Illinois is absolutely not landlord friendly at all. Like it's horrible. I would not look at personally investing in rental properties in Illinois. Yeah. So yeah, Manuel, you're absolutely not, right that it's basically fix and flip, but instead of selling it to a homeowner, you're selling it to a tenant. And then I don't want to say the quality of rehab is different, but I would say the quality of materials that you're putting in, it's different. If the house needs windows, if the house needs plumbing, you're still doing all of that. But instead of putting like expensive fixtures, you're putting like, a good quality fixture, but not the fanciest one, right? Instead of a $400 faucet, you just put like $150 faucet. And then instead of like putting a high-end granite, you'll put like a basic granite, like the cheapest granite that you can get. But you're still putting, the scope of work is still the same, but the biggest difference would be in the quality of material that you're using. You're still using like decent quality material, but not the top of the line. I would say like mid-grade material, and it pays off in the long term. You have less calls on the rehab. Putting in a a higher quality toilet just pays off. You have less plumber calls. So I would rather, instead of $100 toilet, I would rather spend like $125 or $150 on the toilet up front. And it just makes, it helps with the plumbing, because you put a cheap toilet and you have to call plumber once, where it's just more expensive now. With the cost of the toilet and calling a plumber than it would have been just to put a little bit more expensive toilet. And you would, even if you have one less plumbing call, it just the toilet has paid for itself. But yeah, it's basically you're still flipping houses, but instead of selling it to a homeowner, you're selling it to a tenant. So if you, in my case, one thing I wish if I could go back, one thing I would change is, so initially when I started investing, when we were selling properties to Australian investors, like we were doing hundreds of these a year, instead of setting up my own property management company, I partnered up with a different property management company and just, started feeding them properties. So in hindsight, if I could go back, I would have, if I had the vision of kind of what we were going to do, I would have set up my own property management company, and we would have about like 1,000 units that we would be managing at this point, instead of like close to 200 that we manage right now. So that's one thing I wish I could go back and set up my property management company. So if that's something you're looking to do, say initially you could partner up with a property management company, or depending on the laws in your area, you could manage on your own or hire a handyman, and just like a temp, VA or something to help you with the property management. But as you're scaling, keep in mind that, the property management business by itself could be a cash flowing business for you. It becomes another business that you have, money coming in from, between the property management fee that you have, and then the contractors that you're working with are generally a little bit of markup when you are doing work for other contractors. So that money all starts adding up, and it's another cash flow for you that you have. So instead of, you sell a property, let's say it's renting out for $2,000, you sell that property, and then you make, let's say, 20, 30, 40,000 on that deal. But now if you have a property management company, off that $2,000 every month, you're getting $200 as property management fee. So that's another $200 that just keeps, getting added to your cash flow. So you're keeping 10% of that every month, as long as the property is rented out. And then if it goes vacant, then you're charging like half month to 1 month of rent to rent out the property. So it helps, you add additional cash flow to your personal business. So yeah, I mean, for us, most of the leads, the property that we sold, that I signed the closing documents for today, we bought it from MLS. It's a straight deal from MLS. We couldn't have wholesaled it. We couldn't have done retail flip with it. We bought it as a package of 6 properties from another investor that, just, he had bought the property a few years ago. The values went up. So he was making like 200,000-300,000 selling those properties. We bought them, and, as a package of 6 properties, rehab them, rented them out, and then selling those properties. The good thing with Turnkey is you could buy these properties from MLS also. We're buying these properties from MLS. The investors that we're selling to, they know exactly how much we paid for them. But again, the value add is, we're going in, updating everything with the house, renting it out, getting it cash flow ready from day one. So the moment they buy the property, it's a cash flow positive asset for them. But we also do our own, direct to seller marketing, direct mail, PPC, paper lead. We're kind of looking into just the area that we invest in. I had this conversation with another investor. The area that we invest in, when you do paper lead, typically you have to buy leads for the entire county, but we're very focused on like 5 cities. And then there's a major city in the county that we invest in. It's a D neighborhood. We don't buy anything there. So more than half of the leads that we get are from that D neighborhood. So, and basically those are wasted leads for us. So we just discard them. So it just adds to our cost per lead. It basically doubles. If 50% of leads are coming into an area where we don't buy, we're wasting those leads. So we're looking into that. But yeah, direct mail is a good way. We're sent out direct mail campaign, about 4,500 letters that we're sending out to absentee owners in 5 cities that we invest in. We're going to do that every 45 days. we're doing PPC, and then we do a little bit of cold calling is what we do. And because we're doing a lot of turnkey, I just talked to my project manager and said, hey, let's just start looking at more properties in MLS and see, if it makes sense. At a minimum, we want to make about 15% off our sale price on that property. So if you're selling a property for 200,000, we want to make minimum 30,000 net profit after everything is said and done. So it's not super hard to meet that criteria from MLS if you're doing turnkey. One other thing I would do is make the process super simple, make a list of materials, and then just use that for every single house. The tenants don't care as long as you have a nice beige, gray, neutral color. Just use it in every single house. You don't even have to decide, hey, this house, let's do gray, next house, let's do beige or light blue, dark blue. You don't have to do that. It's just every single house, exact same paint, exact same flooring. I think we use, vinyl plank flooring. It comes with a 25-year warranty. Looks really good. Just go in every single house, we do that. Faucets, light fixtures, everything that you can decide upfront, then you don't even have to think about it ever again with any property that you're selling or any property that you're rehabbing. Yeah, and then if you don't have your own property management company, I would just start reaching out to some local property management companies and start building relationships with them, negotiate on, you could even negotiate, hey, if I'm gonna send over a client to you, is there like some sort of a referral bonus that you can give me? Those sort of things. If you don't have your own property management company, you could start looking into that. Any other questions you guys have or anything else that I can answer for you guys on the turnkey side or anything else? All right, guys. Thank you so much for jumping on the call. The recording of this call will be available on our help center by the end of the week. And if you have any questions, you can always reach out to me at Sharad at REsimpli.com. If you want to talk, I've had some conversation with some of you guys on the specific questions you have on rehabbing or flipping or turnkey. More than happy to help. And I'll put my email in the chat. So if you want to reach out and ask, get any more information, I'm more than happy to help. Thank you, guys. Thanks. Have a great rest of the week. I'll see you guys on next week call. Thank you.